Well everyone, it looks like I was wrong. I called for a 20 to 30% decline in the S&P 500 and the Nasdaq, but we didn't quite hit that. But unlike other YouTubers that ignore it when their predictions don't come true, I want to own it. I want to find out the reason why I could be wrong, and I also want to find a way to hedge my positions, hedge my predictions in case I'm wrong. Because as we all know, it is extremely difficult to time the market. Pretty much nobody can time the market. Even 95% of hedge funds can't even beat the S&P 500. So it's going to be very hard for people like myself, just an average Joe here on YouTube, to try to time the market as well. But me, I'm a bit obsessed with macroeconomics. I'm a bit obsessed about the markets. So it's not going to stop me from trying. So everyone, in this video, I'm going to give you my updated thesis on what I think exactly is happening in the markets, because I don't want to be a perma bear when things are looking bullish. I want to acknowledge it. Now, this doesn't mean I'm going to go all in, but I am starting to hedge my positions right now. Okay, everybody, let's not waste any time. Let's get straight into it. Okay, so first things first, what we have to acknowledge is what has caused this selling pressure over the past 3 months, and are all the risks off the table now? Well, the first thing that spooked the markets was in December, when the Federal Reserve all of a sudden flipped on inflation being transitory, acknowledged inflation wasn't transitory, and said they're going to start aggressively fighting inflation. Now, what have they done since then? They've tapered their asset purchases. They're no longer buying any assets. They have lifted interest rates by 0.25%. They're saying that they could possibly lift interest rates by half a percentage point in May, and they're saying they could possibly start tapering their $9 trillion balance sheet in May as well. Now, what the Federal Reserve has done is they've told the markets everything they're going to do in advance, which is what is called forward guidance. So what happens with this, and like I've been saying, is the markets price this in before it happens. And when the Federal Reserve does start lifting interest rates, you're going to see the markets rally because they've already priced in the first 5 to 6 rate hikes. So the uncertainty of what the Federal Reserve is going to do right now is now off the table. Now I'll get into later why things could get worse with the Federal Reserve and why things could get worse with interest rates. But again, I'll get into that later in the video. The second thing that's really spooked the markets was when Russia was on the border of Ukraine and the tensions building up there. Now again, what happens with the markets is they try to price in the worst case scenario before it happens. And the markets, like we all know, they hate uncertainty. And I think what the markets were really worried about if the US or NATO would step into the conflict as well. We saw skyrocketing oil prices that hit $139 a barrel, close to their 2008 all-time high, but now oil prices have come down, and it's looking most likely that NATO and the US won't get involved in this conflict. Now also, what you have to know about the markets is they can be irrational. They can be irrational to the downside and to the upside. When there's a lot of fear and a lot of selling pressure, it creates more fear and more selling pressure and margin calls. But when the markets reverse, this causes FOMO. People see the markets going up. They see like what's happened over the past 7 trading days with the Nasdaq going up 12%. A lot of these retail stocks all of a sudden skyrocketing. So people are now FOMOing back in. What I think is now happening to the markets, and what has caused this rally, is the markets have priced in a lot of this fear, and eventually people start to get over these risks and over these fears, and they get desensitized to it. That doesn't mean the risks go away, and that doesn't mean the risks are going to lead to real declines in the economy and the markets. It just means investor sentiment begins to change. So this leads to the question that I've been asking myself for the past week: is this rally really going to continue? Was that the bottom? And should I start going into the markets right now to hedge against a possible market melt up? Like what I said in my video a few days ago, I said what can happen is if inflation keeps getting worse, and it's quite clear that the Federal Reserve is not going to do what it needs to do by lifting interest rates to match inflation of say 8%, like all other countries that have experienced high inflation, you could see an asset market melt up. Now, there's no guarantee of this, but it is possible. And myself, I want to hedge against different possible scenarios, so that way it reduces my downside risk. So, okay, exactly what am I doing and what am I buying right now? Well, what I have been doing over the past year is I've been increasing my cash positions. I've also been dollar cost averaging into gold as a way to hedge against inflation and as a way to hedge against a recession. Now, I've made some good returns on gold, but gold is still near close to its all-time highs, and what we're going into right now is a risk on environment. So assets like bonds and golds aren't going to perform well. So assets like gold and bonds will only really boom once we are officially in a recession, and once the recession fears are really magnified. Now, no, I'm not going all in right now. I still think it is more likely than not that we are going to enter into a painful recession from skyrocketing oil, from skyrocketing energy costs, housing costs, and food costs all happening at the same time. And I'm still also hopeful that the Federal Reserve will finally suddenly come to the party and lift interest rates much higher than 2%, at least to 5%. But just in case that scenario doesn't come to pass, what I'm doing right now, this is not financial advice, this is just what I'm doing for my own personal position, because I've got, a first world problem of too much cash in my portfolio. I've already deployed a lot of my cash into gold and silver, so that's at about 35%. Now, previously what I was waiting for Bitcoin was to fall between $30,000 to $25,000. But with the market going back into a risk on environment, I think Bitcoin and Ethereum may do well, may possibly even outperform the S&P 500. So I'm deploying 40% of that 25% of my cash into Bitcoin and Ethereum as well, especially because Bitcoin is still about 35 to 40% off its all-time high, so it is a bigger discount than stocks right now. But me personally, I don't like to go all into one asset class. I like diversification to reduce my risk, so I'm also placing 25% of my portfolio into the S&P 500 ETF. Me, I'm so busy with creating content for you guys, I don't have the time to research individual companies. I'm not an individual stock picker. And I've seen many YouTubers, try to pick individual stocks, and it hasn't really worked out well for them over the long term. Simply, normally just the S&P 500 over the long term beats out 99% of stock pickers. And let's have a few small speculative plays. It's a few percentage of my portfolio in high speculative plays like commodities, art, and collectibles. We all know those Pokemon cards are going to the moon. But again, everyone, I just want to reiterate, this is not me going all in right now. I'm not deploying all my cash right now. And this doesn't mean I'm all of a sudden flipping into, a perma bull, moon boy. This just means I'm hedging my portfolio against either a downturn or a market melt up. Again, like I said, I still think a crash is very likely. And if the markets continue to sell off, well, guess what? I've got more cash to deploy there on the sidelines. But everyone, what do you think? Do you think that was the bottom we saw last week, or do you think there's more declines coming? Do you think this is a bear market rally or a suckers rally? Let me know. Now, for all my loyal viewers and subscribers still watching, you're awesome. Now, for all my viewers that are interested, Moomoo is doing a special promotion this month where you can get up to 5 free stocks worth all the way up to $3,500 for when you deposit $100 or more. I'll put a link in the description and a pinned comment. Thanks for watching. I'll see you in the next video.